The Hedgeless Horseman here. It's the 22nd of December 2022. Soon tax loss selling season is behind us, and some asks and sell orders should disappear. First of all, I want to touch on a tweet from a guy I think is pretty good, has many good comments on investing. Like he says here, don't stress if you had a bad year or two. It took me 5 years to claw back the money I lost by blowing up my account twice. If I had quit at any point, my life would be so much different today, not in a good way. So get over your failures and just keep pushing forward. I think that's very, very true. It's like, the old saying, winners never quit. And of course, I mean, he's a very successful investor nowadays, but he didn't start out that way. So, I mean, he had to learn stuff along the way. And the same goes for me. I mean, I don't think I'm the same investor at all that I was in the beginning of 2016 or late 2015. I mean, I really think I get better each and every year, like it's supposed to. If you learn, the option is to quit, stop learning, giving up, and accepting fate, or accepting that, hey, I can't beat this market. There's no point in trying to, yada yada. I mean, I hate that kind of mentality. I mean, what makes the market fun, in my opinion, is that one could say it's the highest form of competition, because you're literally playing against everyone else in the world. Everyone that has any money or any shares can do anything at any time. So you're basically, again, battling Mr. Market, and that's the marginal investor. And obviously, why so many, above 95% of people don't make or can't beat an index over the long term is that they can't get over themselves, or they make actions based on impulses and are impatient, etc. Everything that Mr. Market is, because Mr. Market is obviously the let's say the sum of human psychology. So it's basically ourselves in a more primal form, if you may. And that's why I think there's a bunch of quite simple stuff or simple concepts like patience, longer term horizon, using volatility price not as a signal to if the case is good or bad, but just as what it is, price. And it sounds very easy, obviously, but it's very hard to do, otherwise everybody would do it. So it makes sense that the market would be hard, because it's like going against human nature, meaning your own nature. But at the same time, if you have that kind of discipline, it should be relatively easy over the long term to beat the market. And in my opinion, that's the case in a sector like this. And I've shown this 100 times before. If you have a longer time horizon and just appreciate the volatility for what it is, that sentiment always changes, that people go from greedy to fearful to greedy to fearful, a monkey should be able to beat this sector. But in the short term, it's extremely chaotic. Every single day, there's like hundreds of tweets and tidbits of information that's all just noise, but makes people want to do stuff. Something changes in the world every single day. But back to this point, this was my early venture into the mining space. Minus 54% from, let's say, beginning of August to the bottom early 2016, in the middle of January. So I mean, imagine you invest in something, in a sector, and you buy different companies, etc. You have a portfolio. This wasn't just a all-in-one stock. I actually built a portfolio, and that was starting around here maybe. I mean, obviously in hindsight, this looks like an extremely cheap level because we know what happened later, and at this time, whatever. So I mean, from, let's say, where is it? I mean, from this level in this chart, you can obviously see, yes, I was buying in very cheap, very low. So in hindsight, it's like, okay, yeah, great entry. Of course, it was easy making money because you bought in cheap when the sector was cheap. And it hasn't been much cheaper for, I mean, it's just basically this period here didn't really get, well, kinda as cheap, I guess, here. But other than that, just a few other times, the sector was cheaper than when I started buying in. So anyone in hindsight would look at that like, yeah, you made a great entry. Of course, that was easy making money because you bought low. But in real time, it didn't feel that good to be buying here, thinking, hey, I'm buying cheap, and then my whole portfolio went down 54%, more than cut in half. So what do you think? It's like, how do you react to that? I mean, Mr. Market is telling me that I'm a complete idiot who just lost 54% of my entire portfolio in just a few months. If that's not a bad receipt, I don't know what is. We're not talking years or something like that. We're talking in just a few months cut in half. So at that rate of negative return, if you just forward that tape forward, if my portfolio gets cut in half every 4 months or so, you're soon gonna be down to zero, obviously. But I mean, I called bullshit on that. I thought, no, this is cheap. This is just the market being stupid. So I bought all the way down. And when the market finally bottomed, I had no idea when it was gonna bottom. I just knew, hey, these are the cheapest levels in years, since basically this point in time. All of a sudden, after being down 50%, the portfolio ran from the bottom up 500%, and I think from this period here to this, I was up like, I don't know, 200-300% in my portfolio within a year. I mean, superb returns, obviously. I didn't sell out here, though, but it's like things change quickly, and you have to call out Mr. Market's bullshit. That's why I keep saying I hate the expression the market is always right. If you believe that, how can't you believe every single day of volatility to be correct? How would you ever have the fortitude to call bullshit on prices, whether it be too high prices or too low prices? Now, I assume that the market is absolutely clueless. And the same goes for, like, you see funds doing whatever. It's like, yeah, but how many funds actually perform that well? I mean, check out the returns for most precious metals funds. I'm not going to mention any names, but over the last 14 years, they are not that good. So basically, I guess what I'm saying is like, I don't trust the due diligence of almost anyone. Not people in the forum, not some funds, not some typically a big investor, although there are, a few big investors that are really shrewd. They have the track record to back that up. So it's like, if Ross Beatty takes a position, I pay attention to that because he is a long-term investor and obviously has made billions for people. So that I am paying attention to, but I don't buy any stock based on someone else's due diligence, and certainly not Mr. Market's due diligence, because it's Mr. Market that we're trying to take advantage of. So how on earth can you take advantage of it if you believe that Mr. Market is always right, that this was a fair price for this sector at this point in time? which was pricing in that this mining sector will be gone forever. Obviously that proved to be false, like it was proven at this point in time. And when that is obvious, all of a sudden you have a big re-rate. Like, oh, right, the sector is not going away because civilization is not going away. Obviously for a trader that's something else, because if you're just a short trader or whatever, yes, the market is always right, because the only thing you're betting on is that, hey, prices are going to go up tomorrow in the next week or month. You're just playing what the herd is going to do in the short term. There's no real long-term horizon in that respect. So then the market is always right. So do I like the idea of just simply trading? No, I hate that idea. I don't see how you get an extra edge in that. I mean, let's face it. It's like, what does it matter what the actual underlying stock is, etc., etc., if you're a pure short trader? It doesn't really matter. How do you get an edge if you're just trading? You could be trading gold juniors, you could be trading crypto, whatever. I mean, people act the same kinda. I like to play the longer term value approach, and then in that case I think there are some sectors that are more irrational than others. And why on earth would I go out there buying Apple, where there's like 1 million analysts out there, having it kind of fair value, and even if you're right, it's like, yeah, I think Apple is undervalued by 20%. I mean, sure, that's, if you get 20% in a year, that's a good return, or average that every year, that's a very good return. But I don't see the edge there at all, because there's not the same kind of volatility that we have here. Here, in this sector, these companies get extremely mispriced, both to the downside and upside. So that's what I like. The more volatility, the more opportunity, even though everybody hates volatility. It's like, I mean, the only time I would want all of my companies to go up is if I was completely all in. Well, actually, I would never want all my favorite companies to go up at the same time, because that means that opportunity is going away across the board at the same time. In a perfect scenario, it would pretty much be that you find one no-brainer that revalues, okay, to fair value. So the opportunity is going away, and you're sitting at a profit. All of a sudden, it's like you have 9 other stocks that are also no-brainers but haven't revalued yet. Then you can obviously reshuffle that. But if every no-brainer went up at the same time, and all no-brainer opportunities were gone, my future expected returns for any dry powder or reshuffling would be going down. Because let's say every stock went from having an expected return of 200% over the next 2 years to 10% over the next 2 years. So if I pull all my money, sure, I'll have, no expected return except the savings rate. But if I stuck with my portfolio, all in the portfolio, when there was no no-brainer opportunities and only 10% expected returns over the next 2 years, I can't beat 10% in that case. So I know everybody wants to see stocks go higher all the time, their stocks go higher. But I think people are missing the point that if all your stocks go higher and reprice to fair value, that means opportunities is going away as well. So yes, you got your returns now across the board, and you're very happy because your portfolio is up. But then what? I mean, we want to have constantly great situations for long-term results. I mean, it's the same. If we went up here, everybody would be cheering, etc. But all of a sudden, the market would get extremely hard. Because if we're up here, and everything is valued up here, what do you think the next couple of years of forward expected returns are from this level? You can see in this chart, for example, I mean, didn't spend a lot of time up here before going down 80%. Here it went down 90%, here it went down, 60%, here it went down 80%. So up here, when everybody's cheering and everybody's convinced that, oh, mining is the place to be because they look at past history, all of a sudden this market gets extremely hard. Because the amount of opportunities up here that, foretell a good future expected return over the next couple of years are very limited. Very few plays up here, very few juniors up here have good future expected returns. Here they have extremely good future expected returns. So, I already missed the prices down here just a few months ago, when obviously nobody wanted to buy. Why? Because you could throw darts and find something that was undervalued and was gonna go up. So again, it's like my nightmare is that every good story I have revalues higher at the same time, even though that's what everybody else is hoping for. Because they again, most people are focused on their short-term profits, what has happened recently, and if they are making money at the time, if they're sitting at paper profits. But if you're not even taking profits, that could change in a heartbeat, obviously. So it's like the case is over when the case is over, or it has revalued to fair value. Before that, you're sitting on paper profits and paper losses. Like, yes, at this point in time, one could say, hey, this is a disastrous result. Yes, in this time frame. But fast forward 8 months later, same portfolio, superb results. We never know what's going to happen in the future, but I refuse to sell any of these lows, because I know if I sell here and I'm making that loss permanent and go anywhere else, how on earth can I find a sector that has better future expected returns than the mining sector at these lows? You pretty much can't. That's why I again, it's like if you trust that, hey, Mr. Market is right, so it's saying that you're an idiot. No, the market is an idiot. The market was an idiot here, just became an extreme idiot before becoming an extreme idiot in the opposite direction. And our job is to front run what the herd is going to do at some point in the future, and also front run what a company is going to do sometime in the future that has yet to happen yet, because nobody cares about the news release that is 5 months out or 6 months out. But if you care before the market cares, there's a good opportunity there, and that goes into patience. If nobody has patience to buy a positive catalyst that is 4 or 5 months out, okay, but you have, when that 4 or 5 months have passed, people with low patience all of a sudden will care about that catalyst again and buy in. And that's how you get rewarded by your patience. You're simply front running what people are gonna do when the long term becomes the short term. And just on the matter of like some no-brainers. I've re-listened at least, I think, 2 times to Doc Jones' interview with Jason Jessup of Magna Mining, and it's like I was listening to this interview on the way to the gym, but I missed the last part because I actually had to go into the gym. Anyway, so I re-listened to it. It's like a comment made by Jason Jessup in the later stage of the interview. I'm not selling one share before we are a billion-dollar company. Jason Jessup ran mines for FNX Mining, which became a billion-dollar success over 10 years ago in Sudbury, in nickel, buying up old Inco/Valley mines. And he's been, basically plotting to do the same for years, and now since, I don't remember exactly when Magna Mining listed, a year or 2 ago, he's putting that plan into fruition. He's one of the largest shareholders. Again, he lives in Sudbury. It's not some, CEO for hire or whatever. No, this has been in the works for quite some time. And he knows how to operate mines in Sudbury. Old Valley mines. And we know that they bought Green Hill. So when you have one of the largest shareholders and the CEO with his track record, and he's saying, I'm not selling one share before we are a $1 billion company. I think people should pay attention. I mean, these kind of stories don't come out very often. CEO, highly competent CEO, very much aligned with shareholders, and he's like, I'm gonna, by force of will and competence obviously, I'm gonna take this company over to $1 billion or more. I mean, they have even bigger plans over the long term. As I say, he has done it before. Current market cap 105 million. I mean, that's a pretty obvious opportunity there. If you even account for dilution, etc., that's beyond a multi-bagger. I mean, that's above 500% return. If that takes 2 years, superb results, absolutely mind-blowing results from one holding. And just to show here, I've used, I think, fully diluted. It might actually be more, but I use 170 million shares outstanding, fully diluted, and we don't know what's going to happen with if we get grants, etc. But it's like, okay, just 170 million shares out, that would make 1 billion at around $5.8 per share. It's at 0.69 right now. 753% difference to what he says he won't sell a single share until they reach 1 billion. I mean, there's obviously a big, if given the size I have in Magna, if he's correct, or if his vision comes to fruition over the next 2-3 years, let's say, Magna alone is gonna have a positive return on the portfolio, even if every other holding I have, which is like, 30 companies or something, goes to zero from Magna alone. And let's say they miss this. This is undervalued right now. This is a layup, in my opinion. This is one of the biggest layups I've seen. I'm not even a nickel guy primarily, but given what's going on in the nickel market and given how Magna looks, there's other nickel juniors out there, but I don't think they come even close to the opportunity in Magna when you account for the margin of safety. Yes, there's other stuff like Talon Metals, big land package, a lot of exploration. They don't have 2 very advanced assets, which are pretty much fully permitted already in the heart of Sudbury. No, they're out in, I think, Montana or something. They're years away from any type of production. And these guys might be in toll milling production in 12 to 18 months and might, finance building their hub and spoke model. So this is like a ton of organic growth potential in Magna at a time when nickel is one of the hottest metals out there, critical metal, governments giving out grants, etc. So I absolutely did not plan. I didn't think I would have this big of a position in a nickel PGM copper play, but here we are. I can't neglect the fact that there is the ingredients in this play are superb, in my opinion. And it's like yesterday, nickel was up, I think, 4%, which is huge, obviously. It has oscillated, up 4%, down 4%, around, slightly below $30,000 per ton. Regardless if nickel is down 4% today, after going up 4%, the nickel prices are still very high and should be wildly economical, even if nickel takes a bath from these levels. So it's I don't care if nickel goes down 5% today. Magna Mining would still be incredibly undervalued. And what I think is going on right now, for example, because it's like, okay, you have nickel up 4%. The net present value of Magna goes up. I don't know how much it goes up on a day like that, but like at least tens of millions of dollars at face value, and still Magna was down. What I think is happening is that the some of the investors in the private placement at 27 cents are locking in gains, they're shorting against their long position, basically. Because it's like, for the life of me, I can't believe that somebody would be dumb enough to actually net short Magna. In my opinion, by far best junior in the nickel space, and probably, maybe the single best risk reward junior I know of in both, battery metals, across battery metals, silver and gold. So I think that's what's at play. And in that case, again, if the Mr. Market is always right. If Mr. Market was rational right now, we would be close to $2 per share. That's my opinion. So again, and on a day, it's like nickel is up 4%. Obviously, the value of the company went up, price went down. So it's not rational. So I hate, again, when I see people say it's like the market is always right. By what standard? No standard at all. Maybe the value of Magna on paper yesterday went up. Well, if we compare to the market cap, maybe it went up, 40%. And price went down 6.8. No, there's opportunities all over the place. Just you have to, let go of the notion that Mr. Market is always right. In the short term, Mr. Market does whatever the hell it feels like on a given day. And if the market was fair, there would be enough buying out there to offset these guys shorting against their long position. But it isn't, or there weren't. No, I pretty much, over the last 2 months, I've almost bought more Magna on every single day the price was down. Simply because I have this in mind. So it's like, hey, theoretically here, just let's say from the top here, just a few days ago, maybe the expected returns if Jason delivers on his vision is 675%. Just 2 days after, maybe it's 745. These dips, this volatility in the mining space on the short term might have huge implications for your long-term results. So again, 2 days worth, let's say, of volatility, and the expected future returns over the next 3 years might have changed by 100%. And if you pull 100% returns every 3 years alone, that's superb. So it's like maybe a few years worth of good returns changed just from 2 days of volatility. Just this 6.8% dip yesterday. Maybe, theoretically here, maybe a buy 2 days ago would give you 600% theoretical. And maybe if you bought yesterday when it was minus 6.8, maybe that's 670% return going forward. So huge implications from just short-term volatility. Somebody's shorting probably against his already big long position that is up over 100%. And that opens up for opportunity for anyone else, because the market doesn't have the buying power right now to keep this this market fairly priced. That's just how it is. And one day these miners are going to be overvalued. Hype is going to be ramping, and there's going to be opportunity to sell because they are trading way above fair value. They are not. Then it's going to be too much buying power and too few sellers. So the valuations are going to be at premiums to what the actual value is. But that's yet to come. We're not even close to that. So there's no problem there yet. I guess, might take a year or so before we reach really overvalued valuations. But that's what I think is happening right now. And it's like, I don't trust Mr. Market at all. It's like, back here it should already be up at $2. Back here, or here it should already be at $2. So I just, every dip pretty much I've just added. Because it's like spite buying. It's like, I can't believe how dumb the market is right now. And that's what my approach was here when I went down to this crash bottom here. I knew the Mr. Market was, I called the bullshit of Mr. Market, and I just averaged down. And in the end, that turned out very well. But there's no guarantees for any of these stocks. Anyway, next up's like Western Alaska. Think about this. This is a silver juniors, more high risk reward, more high risk, high reward than Magna, obviously, because they don't have a resource, they don't have permitted projects, etc. But they have some of the best silver polymetallic intercepts in the entire space. And if we just look at this slice here, it's like, okay, thickness here 47 meters. I think this runs around 800 grams per ton AG equivalent, 107 meters, 30 meters, what's that, 80 meters. If we just take a, it's probably not gonna just end here. It's probably gonna go some ways yet. But if we just take this slice here and like estimate this is 50 meters, let's say the width here is like 50 meters. Sure, it might be a bit less, might be more, it might, bulge here, it might, shrink there, who knows. But it's like 50 meters thickness, average thickness here, 107, 47, down to 80, just an approximation, okay? 50 meters thick strike, let's say this is, 150 meters, width, 50 meters wide, 800 grams per ton AG equivalent. That's like 38.6 million ounces of high grade stuff, of 800 grams per ton stuff, potentially, just from this slice here, basically. And then you have this, and all of us, obviously, that's like this portion here. So they have an entire district, and this trend is far from drilled out yet. I mean, they're up here. Who knows how far this might go? I've just added some question marks here. And this is a cross-cutting structure. Maybe there's a trend going this way, all the way to the deposit they already have. They actually have a resource here, and it was a former producing mine. So I mean, permitting, it's de-risked from a permitting standpoint because there's been a mine already here. So it's like obviously huge blue sky potential. And I think, given just this picture, I think they're up to probably half of Silvercrest already in terms of bonanza silver polymetallic mineralization in Alaska, with some de-risking stuff going on. Insiders own a huge chunk of the company, like 40%. So this is like in my opinion, the closest to a Magna mining of silver. I think what's the valuation? $125 million. I think Silvercrest is at, but they're going into production, or actually are in production perhaps. 1.2 billion. Okay, 1.2 billion. I used some. This was made a month ago or so. They have an end goal of 2023 of having 120 million ounces AG equivalent at like bonanza grades. That's a Silvercrest sized deposit, and that's now worth 1.2 billion. And that would be from like, let's say 1 kilometer in this whole picture here. 1 kilometer of this. Is that out of the question, given I think that they have like half a Silvercrest already because it's getting so thick here? I don't think that at all. So it's like, from that perspective, what's the risk rewards? Like, this is if they would have a third of a Silvercrest, if Silvercrest was valued at 1.3 billion. That's like 249%. You have to adjust for a bit of dilution, of course. I think they're already above 1.3%, or 1/3 of Silvercrest. So it's like, to me, Western Alaska the risk reward is superb. And that's why I, like Magna, I look at an intact case. I look at end of 2023, when they will likely have something that's might be worth 1 billion one day, and that still leaves all of this other stuff left to explore, basically. I mean, if we look at the Santa Eulalie district or some the other one, what's that called? The Tintic, something like that district. Also huge CRD system. I mean, Santa Eulalie, I think it was in production for 300 years, was or had 50 million tons of resources or metal endowment. I think they can have, I mean, if they have a Silvercrest type deposit just from this slice here, that's like 3 to 4 million tons. So imagine if this actually is a, Santa Eulalie type district with like 50 million tons or whatever. And we're not paying a cent for that. I don't think we're even paying for this here. What's likely to, if you, infill drill, etc. What's just here, I don't think we're paying full price for now. Certainly not paying full price for another Silvercrest type deposit, which might be reached just from, a few hundred meters extra, especially if it's like around this thick. So in my opinion, it's like, how hard is it to buy dips in an intact story, which is one of the best you can find? It's like when price went from here to here, nothing changed for the story, but price changed a lot. So again, it's like theoretically, let's say we have a Silvercrest. Okay, what changed? And I talked about this at the time. Maybe you get 350% expected returns over the next 3 years from this level. Who knows? Adjust for dilution, and obviously it can go way beyond that, because I mean, if we need like 4 million tons to have a Silvercrest, and this system might be 10 to 50 million tons, I mean, we're probably going to blow way past Silvercrest. But like, take, aim for the stars, hit the moon, let's say. But let's say it's 200%. And down here all of a sudden, or down here just a few weeks later, it's like maybe, I don't know, 1,000% when accounting for dilution. The case didn't change this much, price changed this much. Mr. Market voting with its feet made these oscillations happen. And all of a sudden, it's like, I didn't predict that it would go, I thought it would be, retrace from a run like this. I didn't know it was going to go this low. I bought this low. Why? Because an opportunity presented itself. I don't try to predict what the market is going to do in the short term. I take advantage of what the Mr. Market is going to do in the short term. I don't think I really sold much up here either. Took profits, because I've been in since the IPO. But it's like, this is in the short term, yeah, kind of overstretched, whatever. But it's like, I have no problem hodling this. Let's say you buy in at whatever. If you buy in here, you see this go up, you see it go down, you feel like an idiot. No, I think actually a buy from here is gonna turn into a good profit in like 2 years. So I don't think this was a mistake to buy. I certainly don't think this was a mistake to buy. I wouldn't be thinking selling Western Alaska at around these levels is a good idea. There's no guarantees, but it's like, again, if you have Magna, for example, that's like, hey, that could pull 700% if Jason's vision is correct. 700%, okay, that's nice. Then you have stores like Western Alaska, could also pull like, 700% over the next 2-3 years. So I mean, if just those two stories work out somewhere along, I mean, we're not talking blue sky in either case, because if blue sky for Magna, I would think it's above $1 billion, and the same goes for Western Alaska. I think the blue sky is above $1.3 billion. But it's like, just this base case of like blue sky potential, if either of these work and you have like, a decent position, can do wonders. If one works, it's going to more than pay for one that doesn't work, etc. Might pay for 7-8 companies that go to zero. So I just want to have a bunch of these where I don't need that any particular one needs to have a kind of blue sky scenario play out, but I like that there's a bunch of blue sky on top. So who knows? Maybe this won't be a let's say Western Alaska might not be a 6 to 7 bagger. In 4 years it might be a 15 bagger. Stuff like that. It's like then it would pay for a huge amount of companies. And since mostly my high risk, high reward, I don't think, I mean, this is kind of high risk, high reward, but it's not a pre-discovery play. So I have a bigger position in this than I have in a bunch of more high risk, high reward type of plays. So maybe they are sub 1 positions, and you have like 5% in Western Alaska, for example. If that becomes like a 7 bag or whatever, you can just imagine how many high risk, high reward plays that go to zero that would still be paid for if a 5% position goes up, 7 times. So I have a bunch of stocks that are right now like down 80% or were down 80%, but typically I have a bunch of punts like sub 1% positions, maybe sub 5. But in these, in my opinion, best in class type stories, like in my opinion Western Alaska and Magna Mining for sure, I can go up to 20% positions. Actually in Magna it's more than that right now, but I don't want to set any bad examples. But again, it's like a really good story is when you can trade up, really. Yes, you're paying more for Western Alaska than like CMC Metals, which might also have which has a CRD system, etc. Much less advanced, etc., etc. So yes, I'm willing to pay more for Western Alaska because they have more margin of safety, because I think this is what I have here is already like half a silver crest, and if you account for the obvious blue sky potential, account for the management, the skin in the game, enormous skin in the game. I mean, I think Western Alaska from a risk reward perspective might be, I don't know, 400% better than CMC Metals, for example, but I don't know CMC Metals well enough so I'm biased against CMC Metals because I don't think I own a share of CMC Metals at this point in time, but I'll have to look into that. But I guess the point is that yes, Western Alaska is higher value than some early stage CRD plays. But I think it's super cheap still, and based on the risk reward, given that, hey, I like to have margin of safety, I'm willing to pay up for already banked success, especially if what's already kind of proven, if you know what I mean. They haven't done infill drilling, but what is likely there is already making the current valuation very undervalued, and you have all the blue sky left. Because there's a lot of earlier stage plays that have a lot of blue sky left, but they don't have much in terms of banked success or any kind of probable margin of safety. So I'm willing to pay up for that. I'd rather have, and that's why if I have a big position in something, typically, at least nowadays, that means I see margin of safety with probable growth. Those two ingredients, and when you have high skin in the game, etc., makes me sleep a lot better at night, because I know that the management team of Western Alaska has a lot more at stake than me, so they're gonna be worrying about how to create most value when I'm sleeping, pretty much. So I like that portion, and it's like Mark Smith here. So hedgeless your reshuffle into SK has been wildly successful, up about 40% if you got in at the bottom. Congratulations. What are you doing with this position now, if anything, and why? Thanks, Miss Mark. Just trying to learn. I mean, that's a good question, and I made a video on the day of the news release. I said that I think this market reaction is way overblown, and you could see all the trolls and bashers, etc. Everybody that's basically probably quite bitter for having poor performance and just loves to see other people hurting, whatever. I mean, let's face it, when this sector, this is Bear Creek Mining here as a proxy for the sector overall, when this sector goes down, opportunity cost goes up. Up here, for example, maybe there was a bunch of overvalued juniors. Okay, so even a high risk, high reward play like SK Mining wasn't really, didn't have opportunity cost pressures. But as this sector just kept getting cheaper and cheaper and cheaper, I mean, all the option of owning SK Mining is that you could sell that and own something else. That is opportunity cost. So when this whole sector, every other play out there gets cheaper and cheaper and cheaper, that puts pressure on any story. It puts pressure on SK Mining. I think SK Mining actually held up very well when the more de-risked play started to get extremely cheap. Okay, finally you have, and we also have that option selling by an insider. So it's kind of a perfect storm. You have the whole sector going down to a extreme bottom in terms of valuations, which puts valuation pressure on every stock. You have that insider sell for options exercising, and I know people say it's like, yeah, insider sold, yada yada. It was like I think one insider who sold. Not long ago, Mac, the CEO, exercised his options, didn't sell any, so he added exposure to SK Mining. Now he owns more stock than he owned back here. So he's upping his skin in the game, and he has easily over 10 million shares, I think. So you can just imagine. I mean, if we have, let's say, price pain, imagine Mac, the CEO, and still he hasn't sold anything. Again, he added exposure recently, but point is, okay, opportunity cost was increasing as the whole sector got cheaper. So let's say, again, not that SK per se went down in value, it's just that the opportunity cost was increasing. So it's like, if let's say if SK stayed up here and the whole sector stayed down here, maybe there were a lot of better opportunities than SK because valuation was up here and the 100 other juniors were down here. That's a lot of pressure again, but that doesn't mean that risk reward in SK changed at all. It's just that it stayed unchanged while the risk reward got better in other places, let's say. But what happened now after the news release, that is to me capitulation selling. I think, yes, SK Mining has been I've said that a lot of times before, at face value, SK Mining hasn't been cheap. Because it is a high risk, high reward play. I don't think it's overvalued based on the district potential. But it hasn't been cheap either. And then you have a bunch of more de-risked plays getting extremely cheap. Okay? That's a problem for the valuation of SK and any other high risk, high reward story. But that makes sense. You can't just be totally. I mean, you should understand what has been happening. You can't be, pissed that SK went down. It's like, yeah, everything went down. But I simply think that this was going, let's say, and you can see since the sector has gone up. That's also the things. Like when this sector actually bottomed here, and valuations went up while most cases didn't change a lot over this time period. So the opportunity cost to SK went down, meaning that other plays had their risk reward go down because price went up without fundamentals going up. So the opportunity cost of holding SK decreased, and yet the price of SK went down. So the risk reward in SK Mining, given that there were no news, was actually going up. So I bought a bit the day before the news release here, simply because, again, that other stuff had repriced higher, risk reward going down, SK went down, so the risk reward in SK became better. Then we had the capitulation selling, which appears to be capitulation selling. Okay, makes sense. You have a long downturn or downtrend. People believe Mr. Market is always right, and then you have if you reread the sentiment on the day after or on the day of the news release. A bunch of people like the sky is falling, this case is over, etc. And I made a video and like said I don't think this case is over at all. I think this is a way overreaction. I think 130 million for all of the targets that SK Mining has, and we know they already have success at TV and Jeff. And yes, at face value, I had hoped for better assay results for sure from Jeff and Jeff North, but they did hit that 45 gram meter interval, for example, and they hit some other stuff too. So obviously there's like, yeah, there's something going on here. There's obviously VMS mineralization like 800 meters to the north. TV is still, pretty much wide open, and they're still figuring stuff out from at TV and Jeff, and they have and they have a bunch of other targets, including Scarlet Ridge, which we don't even have the first assays from yet. So who knows what they're gonna find here. There's obviously a lot of smoke here. The Blake samples are like off the charts. And these are, the scale bar here is 5 kilometers. There's no way you can kill a story like this from drilling at TV North or Jeff North only. We haven't even begun at Siblulu yet. Scarlet Ridge, if they find something here at Scarlet Ridge, if they have 1 or 2 decent holes or good holes, that means that, okay, Scarlet Ridge and Tarn Lake and whatever they're called, there's a few kilometers of strike here with 3 different target names. That means, okay, all of a sudden, that's a possible discovery and might be a big one. It's like, I call bullshit on the sentiment in the forum. I call bullshit on Mr. Market's reaction, because SK had already started to reprise poor results. And then it's like, when they actually came out, they didn't stop this from being a capitulation selling event. But I thought, let's say SK back here, when the sector was at a bottom, had a fair value, risk-adjusted fair value, let's say here. Who knows? I'm just throwing numbers out here. Then the sector values higher, so opportunity cost goes down, making this risk reward in SK even more favorable. But still, it didn't stop the price to go down as negative news came out. And what is our job? To call bullshit on Mr. Market. So all of a sudden you have, in my opinion, what was already had became cheap, and that's why I bought here, suddenly become way cheaper. So if we, let's say the fair value is just this here, this difference here, 41, all of a sudden it's like 101. So the opportunity, in my opinion, became twice as good. So I started buying here. And now, okay, it's revalued 40%, we're up to 183. And yes, you're sitting on a 40% profit or whatever from the lows. No news has come out in the last 4 days. Price has changed, yes. So risk reward is decreasing. Here it's better risk reward than here, that's for sure. And what I said also in the forums, like, I want to hear what Quinton and the Decker says. They are the experts. And they painted a totally different picture than a lot of bashers, etc., painted on the day of the news release. That's like, they're just getting started, basically. Whereas the sentiment and the talk in the forum was that this is ending. Now, at $130 million for everything here, including all the targets we haven't yet gotten to, let's say, like Siblulu, and we don't even have the first assays out of this Scarlet Ridge trend, which seems to be a very exciting area. And also, most of the massive sulfide hits at TV are left to be reported. So I think the worst results in this campaign are actually probably behind us already. so it's like, yeah, you know, I mean, if they get something good out of Scarlet Ridge, the narrative can flip again like that. And if they hit more TV, it's like, okay, all of a sudden, Mr. Market's like, hey, I mean, TV is still yet to be drilled out, and they have some more good results there. Oh, and they have a discovery as well, and they're gonna probably drill Siblulu next year, and try to connect Jeff with, you know, Siblulu across the, what's that called, like the Mercury hexagon trend. Imagine how the sentiment can change just from, you know, the next holes coming here, and the sentiment change just listening from Quinton and the Decker explaining that, hey, we're learning more and more all the time. This sector is, or this story is far from over. Am I piling in right now? No, I'm not really piling in, but I haven't sold any shares yet that I bought here. I wanted to buy more actually at the bottom. That pissed me off that I didn't have more dry powder, because this was such a, in my opinion, no-brainer buy down here. Kind of like, again, when you see a completely intact case like Western Alaska go from here to here, I was buying this as well. And same for Magna. I mean, if the case is intact and it's already cheap and there's probable growth, etc., it's like, I have no problem buying dips. I have a much harder time buying dips in a trading sardine, because I don't really know if it's cheap or not. It's not a top quality junior, yada yada. They don't have probable growth. So what I bought in has revalued from the lows, but okay, at 183 million. Okay, is that expensive? If we, you know, we're in the beginning stage of a bull market in gold and silver, and you own all of this, 85% of the VMS district of SK Creek. No, I don't think that's really expensive. Is it super cheap? Well, that's hard to say, because it's more of a probabilities game at this point. But again, if they hit something good here at Scarlet Ridge, maybe the case changed a lot. Maybe it should go up 50% just on the potential of you know, proving that yes, there's good mineralization here along, you know, X few kilometers of strike. So this is still a high risk, high reward case. Extremely hard to put a fair value on it. Obviously, the less you pay, the better, because you pay less for the upside. So and less is priced in by definition. But I'm right now, I'm keeping the shares I bought. I don't think SK has become overvalued yet. I think it's still, given that the sector overall has revalued, you know, quite a bit, and SK hasn't really caught up to that. So I think the opportunity cost has gone down for SK mining, because other stuff has gone up more than SK has gone up after the crash. But it's all about, again, probabilities. I mean, these buys, if they prove a discovery, whatever, if they prove out more of a discovery at Scarlet Ridge or whatever, who knows? Maybe you know, these buys here will, you know, have 400% return in like 2 years. Maybe a buy today will have 268. I don't know. It's just degrees. The only thing we know is price, and I'd rather pay less than more. But I don't think, like, this bounce here hasn't put SK Mining at you know overvalued category, etc. I don't think that's the case at all. Again, given the case has been for me that SK Mining, I'm pretty confident they will find something substantial when all is said and done, and they've tested more targets. If they find something substantial, that's going to be worth more than 183 million. But it will take time. All of these cases I'm talking about, like Magna Mining, it might take 2-3 years to get hopefully a 7-bagger. Western Alaska might take 2-3 years to possibly have a 7-bagger. SK Mining, we don't know if they make a discovery, etc. We might have a 7-bagger from this level in 2-3 years. I don't know. I just know that I don't need every single one of them to pull a 7-bagger or more. If one could pay for the other two, etc. It's just about risk reward, playing the possibilities. I have no idea which actually will succeed. One other company that I think has, you know, became better and better while price hasn't really done much. Nevada King. Uh, I think Nevada King's margin of safety and value has been going up steadily. They have one of the largest land packages. Colin Kettel, CEO, owns a bunch of stock. They have good geologists. They've added like ex-Barrick people. Have a huge land package. I think Atlanta Gold Mine alone makes actually the current valuation quite cheap. So if you're not even paying full price for Atlanta Gold Mine and they have all this other ground going into a bull market, yeah, I think Nevada King is one with margin of safety, probable growth, and I think Quinton said he believes this will, he had very positive comments recently about it. And if one expects this to be at least 1.5 to like 2 million ounces or more at the end of the day, oxide gold in Nevada at a past producing mine, maybe that's worth several hundred millions at the end of the day. So I like the risk reward in Nevada King, and again, it's like if Nevada King hasn't really revalued, but other companies have revalued, that means the opportunity cost is decreasing for Nevada King, looks more favorable relative to everything else you can buy. Yeah, and also some good examples. Okay, see some insider buying by Quinton here in Novo. I mean, this is basically the opposite of all the GDXJ ramps you saw last week. Some silver juniors up like 20 to 60%. Novo got cast out of GDXJ, that's the big spike here, and went down. Nothing changed for any of the companies. That was just a fund flows. So some got bid up a lot without anything happening fundamentally. They didn't go up on news or anything like that. So by definition, the risk reward decreased. Novo went down on no news. So by definition, the risk reward got better. And I wish I had more dry powder. I mean, there's again, I would like to buy more Magna. I would like to buy more Western Alaska. I would like to buy more SK. I would like to buy more Nevada King. I would like to buy more Novo. There's like, I don't know, 10, 15 other stores I would be happy to buy simply because everything is so goddamn cheap right now. But if you're all in, you have to be a value shuffler. It's like I said about SK Mining. I had to sell some Snowline, which had gone up like 40% on no news, to buy some SK Mining, which had gone down 40% on news, but I think it was becoming too cheap. That's value shuffling to me. It's like, okay, something goes up without any news. So you don't know that the actual 2-year price target increased, but price went up, so that means there's a bit less upside. But if you have an intact case, like let's say Novo went down on no news, that means there's more potential upside. So that's basically, what you have to do if you're pretty much all in all the time like me. And that's why I keep saying that I'm very bad at selling. I didn't want to sell some Snowline shares. I think Snowline can be, one of the hardest. I mean, yes, it's done very well, but it's like if you look at some of the monster acquisitions that has happened, like Canadian Malartic and Detour. I mean, those were like $3 to $4 billion sales for 10 to 15 million ounces. Snowline might have 20 million ounces and counting, and it has a market cap of 478. Sure, there's like, permitting risk and all that. Yes, but imagine we go into a hot market environment and everybody's looking for the biggest gold deposit around in a junior in North America. Maybe that will be Snowline. So who knows where the valuation might go, and who knows how valuable Valley might be. I mean, from an operational standpoint, if you have like millions of ounces of 2 gram per ton close to surface, I would expect that to be a complete cash cow if that were to become a mine. So that's like economic value for sure, I think. a bunch of economic value, maybe billions in economic value if they have like even 5 to 10 million ounces of 2 grams per ton. Obviously it's remote and all of that, so you would have, that's a higher threshold for critical success you'd need to actually develop a mine. But sure, I can see that. So I'm not happy selling anything right now. But when stuff comes along like SK Mining, yes, in this case, I added a bit the day before the news release. When that went down like 35%, all of a sudden it's like I said before, let's pretend SK will reach this level at least. The day before the news release, maybe, or I don't know, maybe it was here or something. 250%. All of a sudden, after one news release, capitulation selling, maybe that added 200% in expected future returns. That is many years worth of returns from one single event. So I went from like, yeah, okay, I'll add something because I think it's becoming too cheap, to like, yeah, I gotta add a lot because it's way too cheap. One day. I didn't predict it. I reacted to the opportunity presented to me by Mr. Market. Same as I bought Novo on the GDXJ flush. I mean, they just raised money at 39 cents. The stock is trading at 2.75 or 0.275. That's an opportunity to me. Why? Because GDXJ sold. Price went down, while fundamentals did not go down. Do I know that I'm going to get a multi-bagger in Novo from these levels? No. But if things work out, I'd rather pay 0.275 than 0.39 like the ones who got into the company that bought into a placement. And again, it's like, I cannot stress enough that the volatility you see, a minus 20% decline on nothing really in a stock might have huge implications for the upside potential and risk reward, because obviously margin of safety becomes higher if it's, I mean, again, take Magna. If that stock, like yesterday, went down 6.8%, while nickel went up 4%, maybe the margin of safety increased by like 30 million or 40 million or 50 million at face value because of a rising nickel price. And so value went up, price went down 6.8%. Maybe it's like, again, margin of safety increasing, price decreasing. So not only do you have bigger margin of safety, you also have higher expected returns. So what just looks like, hey, okay, one day of a declining price action, maybe that 6.8% opened up a 40% expected future return opportunity from the day before. Just one day's worth of price declines. I keep saying this, like, in a long-term perspective, the short-term volatility is our bread and butter. Again, take Western Alaska. Since nothing has changed, when price is as volatile as this, there's huge long-term opportunity opening up. Huge. Whereas everybody's bitching about the declining price. Okay, if you have dry powder, whatever, why even if you have a position in let's say you have let's say you bought a 5% position in Western Alaska at the top here, and it went down like 50%, and you're like, oh, 50% correction. Oh my God, I hate this sector. You can't make money on this sector. Your 5% position goes to 2.5%. But at the same time, crisis and opportunity are the two sides of the same coin. All of a sudden, this might have gone from, this is worth a 5% position to like the risk reward getting so absurd all of a sudden. Let's pretend that, again, this is a fairly accurate statement of the long-term potential. It went from 359% expected return to 1,300% return with obviously more margin of safety, because it takes less ounces to fill out this valuation than this valuation. Maybe the case went up 500% in quality. So instead of having you had a 5% position here, went down to 2.5. Maybe you have some other stocks that did well, and you're like, hey, okay, it was worth your 5%, or let's say 3% here. But when price declined 50%, sure, you took out, paper loss from here to here on your, let's say, 3% position, but all of a sudden, like, Jesus, okay, but now we are here, and all of a sudden I think this is worthy of 15%, of being a 15% position. So like 5 times better risk reward here than here. So would you complain that, let's say you do end up piling in because you now got presented with, Western Alaska this price instead of this price? So let's say instead of taking a 3% position here, it gets cut in half, but then you up it to 15. Just theoretical, I'm not saying you should have 15% in Western Alaska. Let's imagine you get a 15% position that returns, let's say, 1,000%. That would pay for more than your entire portfolio alone. So was it a curse that it actually retraced? Yes, you take a paper loss at this point in time, or you have a paper loss of, let's say, 50%. But this might have opened up the best opportunity that you can find in the entire space. And all of a sudden, you're plowing in 500% more money if you can. So in the end, if you started here and it just went up there, you had a 3% position that went up 355%. Great. But thanks to the volatility, thanks to this crash, maybe you ended up, hey, now it ended up working out in a way that you instead got a 15% position that could return 1,000% or more. So was this dip really a curse? If you ask 100 people, 95% would say this was a curse. If you can't do anything about it, in terms of like buying an intact case that goes down 50%, yeah, then it would be a curse. If you have no dry powder, sure, but if you have something that is not as cheap, maybe the thing you sold had an expected return of 480%, so you sold some of that upside, which is great, and you just got 1,300% upside. So you added like 700% upside just from selling a good case to or a good risk reward to buying a great risk reward. That's why I don't get pissed by declines typically. Well, I am offended by the valuation in Magna Mining, that I am, and I have such a bloated position in Magna Mining that it's like, it's getting crazy to add even more simply because I have such a big position. So when you hit the upper limit of your risk management, then it becomes frustrating. Otherwise, it's like, hey, if the market put something on sale and the case went up, the risk reward went from good to 500% better, that's not a curse. Thanks to this decline and one being an active reshuffler, spotting an opportunity for what it is, Mr. Market is putting this on sale. Maybe if this didn't happen, maybe our portfolio would have performed worse over the next 2 years. But since this opportunity presented itself, hey, I'll sell something else, buy this, and maybe the future portfolio returns went up 100%. It's like, I have no idea if that's going to play out, but I hope you get how I'm thinking about it. That's why it's like, don't get pissed when you see volatility. Don't get pissed if you see a stock go down 20% on no news, or maybe 50% or 30% on bad news, but it's not like it's not as bad as Mr. Market says, that might have been a new opportunity, just presented itself. Same as if you have a GDXJ plowing into some silver junior that has done nothing to create value and it goes up 30%, that is obviously risk reward getting poorer because value didn't go up, price went up, and if price went up, you banked a paper or you have a paper profit now and less paper profit later. That's an opportunity to sell and buy something else. So that's how you use volatility. I love volatile sectors. I mean, again, I was licking my chops when I saw SK go down 30%, 35 or whatever it was. I think that was an opportunity that just presented itself. I didn't predict it, but I reacted to it. Same as I bought some Novo recently, because I think that this decline, for example, was like absurd. Not that there are any guarantees, but if this works out, I'm going to make more money from this level here than from this level here. Yeah, a bunch of rants, longer than I thought I was going to do a short one, as always, but I ended up being quite a bit longer. But I hope I don't know if I exactly answer the questions, like what I do with SK. So far, I haven't sold any of the SK shares I bought in the latest dip. But if let's say SK goes up to $1.5 without any news out yet, then I might sell some of those shares. But if they make some kind of discovery, Scarlet Ridge Valley and all of those, and hit good at TV, maybe I'll be buying instead at 1.5. It all depends on what happens to price and value. If price only changes, by definition risk reward gets worse if price goes up and nothing else changes. But that doesn't mean, like, if in Magna Mining, for example, if price changes, goes up to $1.2, I still think it's one of the best, absolutely best risk rewards I've seen at that point. Everything is relative and you have to compare it to every other holding you like. But again, if SK hadn't had this 35% dip, I wouldn't be buying as much SK as I did. I just react. If Novo had been included in GDXJ and went up to 50 cents, I might not have added any. It went down while valuation did, or while the value did not go down. So there's a expanding price to value gap there. So that's why I bought. So again, in the end, this volatility in the stocks, volatility in good cases, most people look at it as a curse, but that's why because they don't really know what they own. They don't have the conviction. They're not looking at, hey, if my base case is that Western Alaska is going to be worth $1 billion one day, would you rather buy it at $6.6 per share or $2? Yeah, Jesus, this was a big correction. More than 50%. No, I'd rather have buy a bunch of stock going from $2 to potentially, let's say, $20 than $6 to $20. I mean, obviously it's a huge, huge difference. Hundreds of percent difference. And this changes again. This was from August to, in 1 month. Within 1 month, the risk reward in Western Alaska might have changed by 500%. Without the case changing much. I mean, again, it's like when you start to appreciate volatility for what it is, volatility is either an opportunity to sell or buy. Then I think you're going to do wonders in a volatile sector. And have a longer term time frame horizon. Because it's like, face it, I've seen people say, I'm going to pick up Western Alaska if it drops to 2.5 or whatever. It's at 2.7 now. How on earth is a 20 cent difference the difference between a sell or a buy? I don't think you understand Western Alaska if that's like, nah, I won't pay $2.7, but at $2.5, yeah, then it becomes a buy. Or $2. I think this is a, I don't know, a buy up to, I wouldn't mind, I think paying $4 will give very good returns over the next 2 years. Then it's not a no-brainer. It's like with Magna. If you understand Magna, I don't think you'd care much about 10 cents even here or there. If you paid $1 or $70, yes, huge implications going forward. But if it's a no-brainer at 1, in my opinion, you can imagine what it is at 0.69, for example. But like, it's funny. It's like you read people's comments. It's like what are your returns? It's like, it makes it sound sometimes that people have like 300% average returns every year. Because that's what it sounds like when they're like, yeah, I'm not paying this price right now, but 20 cents less. It's like, again, it just doesn't make any sense. And that's why I know the case changes a lot. But again, it's like if one bought Western Alaska here, I don't think that's a bad buy. I don't even know if this might be a superb buy in 2 years. It's like, yeah, these didn't look to be good buys, but like fast forward to here and it's like superb buys. It's all about time frame, etc. Thanks for listening. Again, consider me biased. I assume I own shares of all companies mentioned, and many are banner sponsors. I don't share your profits or your losses. Do your own due diligence. Nothing is guaranteed. I'm gonna have a bunch of stocks that where the cases do not play out as I hoped. I will hopefully have some where they do play out as I hoped, and they're gonna pay for all the other ones, etc. But don't invest money you cannot afford to lose. And it's like, always assume I might be buying or selling shares at any point in time. So it's like, you have to do your own due diligence and have your own, because I can't hold people's hands all the time. And at the same time, it's like, I'm not bearish on Snowline Gold, but I have to sell something to buy something else. But if I say that I'm selling Snowline Gold, okay, do you hate the stock? No. I have a big position in Snowline Gold, and another opportunity opened itself up. That doesn't mean I'm bearish on Snowline. If I was bearish on any company I own, I would be selling it. I would have sold out. But there comes a time when you have too much in some stock, or an even better stock comes along, etc., etc. So it's a very fluid situation. And who knows? Again, it's like, I have no idea. Maybe Magna Mining doubles in 3 months, and I have, a beyond absurd position. Of course, I'll have to sell. But I might have it as still my largest position. I don't know. Yeah, thanks for listening. Bye, guys.